Hello, good day. Welcome to today's lecture in a practical introduction to day trading. In the previous lecture, we looked at charts, support, and resistance. We will cover the same concepts in greater detail in this lecture. Let's select a random currency pair. We selected USD JPY. Let's delete these lines. So this chart is a candlestick chart. Recall, a candlestick chart is comprised of multiple candlesticks. Red candlesticks suggest the price of the asset is going down. Green candlesticks suggest the price of the asset is going up. Candlesticks are comprised of bodies and wicks. This area between the lowest price and the open price is a wick. This is a wick and this is a wick. This is the body of a bullish candlestick. This is a bearish candlestick. This is a wick. This is a wick. This was the highest price. This was the closing price. This was the lowest price. This was the highest price. This was the open price. This was the lowest price. This was the closing price. This is a bullish candlestick. We can see the asset is proceeding in an uptrend. We can see the asset went up, the asset went down, the asset went up, the asset went down. We can use candlesticks to determine possible areas of support and resistance. How can we determine possible areas of support and resistance? Recall, support is analogous to a price floor. It is an area where the price of the asset may experience difficulty in going below. So lower lows are areas of potential support. Support may be here. This was a potential area of support. Additionally, areas of higher highs are potential areas of resistance. This is a potential area of resistance. Resistance may be a zone. This is a potential area of resistance. We see the asset went up. It bounced off resistance. It went down. It went up. Break resistance. Come down. Go up. Come down. Go up. Bouncing around resistance. Come down. Bounce off resistance. Come down, bounce off resistance, come down. Break the potential area of support, go down, bounce off the area that was previously support, now acting as resistance, come down, go up, bounce off the area that was previously support, now acting as resistance, come down, bounce down, break this area. So around the 18th of April, this area acted as resistance, a break resistance, the asset went up, come down, fluctuate. Let's see if we can identify potential areas of resistance and support on another currency pair. Let's choose a random currency pair. Upon the visual inspection of this candlestick chart, can you determine where are potential areas of resistance and support? Recall, higher highs are potential areas of resistance, lower lows are potential areas of support. One high, two high. This is a range where resistance may lie. How do I determine this? There were 1, 2, touches, 1, 2. This suggests this is a possible range that could act as resistance. There was another touch right here. So this confirms this area could have acted as resistance. There was a fourth touch. This area could have acted as resistance. We see the price of the asset break resistance, go up, come down, bounce off this area, which is now acting as support. The price of the asset goes up, break support, comes down, bouncing off resistance, come down, bounce off resistance, come down, and proceeding to fluctuate. So let's determine potential areas of support. This could be a potential area of support. How I determine this is a potential area of support? The price of the asset went down, bounced off, went up, came down, bounced off. So 2 touches, 1, 2. This suggests an area could be potential support. 1, 2, 2 touches suggests an area could be potential support. 1, 2, 3. The third touch confirms an area could actually serve as support. Support may be this zone here. How did I determine that support could be this zone? There was 1 touch. How can I determine that support could be this zone? This was a low point. There was 1 touch. There was a touch right here, but the price went slightly lower. There was a touch right here. The price went slightly lower. There was a touch right here, and the price went slightly lower. This seems to be lowest area where the price of the asset is experiencing difficulty in going below. So support may be this range. There was a touch right here. So this also confirms that this range could serve as support. So you may be asking, this area here, could this serve as support? Well, let's see. There was 1 touch. Now let's go in the past to determine if this area could have served as support. There was 1 touch here, another touch here. So this suggests this area and this area could serve as support. The asset bounced off here. So this suggests this area could have served as also resistance. The asset break through this area, which is serving as support. And here's a touch right here. So 1, 2, so 1, 2, 3. This confirms that this area here, could actually serve as support. Let's color the line different. Let's color the line different. Color the line blue. So 1, type in 1, 1, 2, well, let's give that touch here. Let's give that touch. 3. 4. Let's look for another touch. 5. So the area acted as resistance here. 6, 7. $6.7. So this suggests this area could actually serve as support. Let's choose another currency pair. So we see here, I have potential support and resistance identified. This was an area of support. This is an area of resistance. This was a mean area here. This area was acting as some form of structure. This was some form of support. We see this area as acting some form of resistance. Then the price of the asset was bounced off or consolidating around this area. So the price of the asset went sideways. We see the price of the asset bouncing off support. The price of the asset bounced off support. So 1, 2, 3. 3 touches suggest an area's potential support. 3 touches suggest an area. 1, 2, 3. 3 touches suggest an area's actual support. This is 1 touch. The price of the asset is bouncing off support, consolidating. 1 bounce, 2 bounce, while a break support. We see here the price of the asset went sideways. It was bouncing off support, it bounced off, bounce off. It consolidated around support. There was a breakthrough. It bounced off resistance. A breakthrough. There was a breakthrough of support. A breakthrough of support again. It bounced off support. Bounce, bounce. Well, this consolidated slightly, and then there was a breakthrough. It bounced off resistance. So this area which acted as support is now acting as resistance. So you've seen in these diagrams, an area could serve as support, but if the price of the asset breaks support and then bounces off the area that was previously support, that area now acts as resistance. So we see it here. This area acts as support. The price of the asset broke support and then bouncing off support. So it bouncing off support. So support is now acting as resistance. We can also see an area act as resistance. So here, this area act as resistance. The price of the asset breaks resistance and now bouncing off the area that was previously resistance. So now resistance is acting as support. Yes, consolidation. Consolidation means the price of the asset is going sideways. There's some fluctuation around a sideways or horizontal trend. This was some consolidation here. There was not much price movement. There was not much price volatility. There was not much wide swings, but there was some sideways movements. This was consolidation. The price of the asset breaks support, bounce off resistance, price of the asset goes bearish. So this is the basics of support and resistance. In the next lecture, I will go in detail into technical analysis. This is the end of this lecture. Thank you.